Hello, hello. What is up, everyone? Hope you're all having a good old day. It's been quite busy in the markets these last 24 hours going here into the opening. So, are you guys? Let me know in the chat. Post your money bags. But everything should be good. Okay. Few things on the docket here today. Let me go into the Discord. Real quick. There we go. So we got a summary of FX moves here in the outlooks. You can actually see some basic expectations for some FX moves here. Let's go back to the announcements. We have a lot of outlooks posted in the last 24 hours. A lot of outlooks. Look, we got BlackRock's weekly outlook. ANZ just posted this, their month ahead outlook for the New Zealand dollar and the cross pairs for New Zealand dollar, which is one of my top currency pairs on my watch list. Oh, I should transition the screen maybe. I should probably show you guys what I'm talking about. Yeah, this is what I'm talking about when I said the outlook, crowdsourced outlook for FX movements. Thank you very much for that. And then here we got BlackRock, ANZ. They just released New Zealand business out. A lot of New Zealand stuff coming out today. A lot of European stuff coming out today. And also, MUFG posted a plethora of Bank of Japan news. And then we have US macro strategy from them. Like, there's quite a bit to read today. And I'm not going to be going over all of it, but I'm going to be doing a quick refresher on some central bank expectations. And speaking of central bank expectations, the RBA didn't hike. They kept things flat. In fact, if we go here to the central banks channel, here is the meeting minutes. My trade research in it. Let's see. Is that the RBA? Nope. Is that the RBA? Yep, there we go. I'll go ahead and switch on over. There we go. So this is the RBA's statement on monetary policy. So real quick, Control F search for inflation. Look, this inflation, boom, 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 everywhere on this. It's just, okay, obviously a big reason why they've made their decision to not move is their expectations for future inflation. That looks pretty straightforward to me. I don't know about you guys. Returning inflation to target within a reasonable time frame remains the board's priority. Okay. To-date medium-term inflation expectations, all right, key term there, expectations have been consistent with the inflation target and it is important that it remains the case. Recent data is consistent with inflation returning to the 2 to 3% target range over the forecast horizon of like the next 2 years, and output and employment are continuing to grow. There are, though, significant uncertainties. Okay, so this is where we need to be looking at. This is what we need to have our focus on. The RBA is explicitly telling us here, this is what will move the needle on them either hiking in the future or pausing in the future or cutting in the future, at least in the immediate term going into their next upcoming meetings for the rest of this year. Services price inflation. And that has been surprisingly persistent overseas. And the same could occur in Australia. Gotcha. There are also uncertainties regarding the lags in the operation of monetary policy and how firms' pricing decisions and wages will, it's all moving according to plan here. All this stuff is moving according to plan. It's actually been better than expected in a lot of cases. This particular reason is why we've had such good risk-on moves in a lot of countries, actually. So the RBA is right in saying, yeah, there is uncertainties here, but unless there is an actual negative surprise in these data points here, I guess, yeah. If there's a surprise, yeah, that'd be an uncertainty. The outlook for household consumption is also an ongoing source of uncertainty. Yeah, of course. They've been saying all this stuff has been a source of uncertainty for literally the last year, since mid-22. All right. Some further tightening of monetary policy may be required to ensure that inflation returns to target in a reasonable time frame. Okay. In making its decisions, the board will continue to pay attention to, they're literally writing it out to you, what they're going to be looking at. They're going to be looking at trends in the global economy, household spending, and the outlook for inflation, which means inflation expectations, and the labor market. All right. Thank you very much, RBA. Over to the charts. And request to look at a particular chart, to look at a particular asset, now would be the time to make that request. In the meantime, we'll be heading back over to the Discord, cover some more of the baseline basics, some of the news stuff that's going on. China, we have some geopolitical stuff going on. This is the top story in Japan right now. China's military speeds preparations to blockade Taiwan. And you can read it right here in the Nikkei, or Nikkei. And it's not good. When you see escalations in Taiwan, it's not good. Why would they want to do those escalations when a lot of China's infrastructure is right now in the crapper? Also, there's been this new Caspian report video that came out talking about how Taiwan could retaliate by bombing the Three Gorges Dam. And I'll go ahead and transition back here so you can actually see, right? So, geopolitics, here's Nikkei, here's the article on China, specifically blockading Taiwan. And then this is the Caspian report video talking about the mutually assured destruction of if Taiwan attacks and blows up the Three Gorges Dam in retaliation to China trying to invade Taiwan. This could flood most of central China and all of Wuhan, Beijing, and Shanghai. This probably could have 400 million casualties. It probably would still have casualties in the tens or hundreds of millions, right? There could be all sorts of mitigating factors to that number. But being aware of these scenarios is insanely important. Even if you're thinking, oh, I'm just gonna go to my charts and I'm gonna trade on what's happening in the news today. I had a great conversation with someone today, and I've always had this definition of kind of what a trader is. And a trader is someone who takes current information and is able to extrapolate how it changes future trading expectations. So if you don't know what the future expectations are, you can't extrapolate on how to position or what will move based off the new information, because you have no frame of reference for what people were already anticipating. Now, don't get me wrong, for example, during COVID, the answer to that is quite obvious, but that's one of the reasons why trading can be so hard. Because when you look at all the hundreds and hundreds of different assets that you can potentially, there's different expectations for all of this stuff. Speaking of which, let's hop on over to the charts. And we'll go ahead and hide that real quick. I'm working on an update for range probabilities. This is what I got so far. I'm playing around with how the random numbers are generated, and it's giving me a much smoother view of things. See that? There's all your tail risk. All this tail risk. Oh my god. Yeah, but it looks a bit different than how things currently look. So you can very clearly see how the random number generation, I don't know if it's improved, but I'm going to be in the weeds in the math, figuring out, okay, is this a more robust way of generating the random numbers? Is this a better outlook for it? So I'll get into answering that on my own time, but just wanted to show off, like, hey, yeah, there's progress being done on the update for range probabilities. Anyways, this is Aussie dollar. Oh man, look at that short. You know what this short reminds me of? It reminds me of the USD CAD trade I just put on not that long ago. Yeah, check that out. I was like 2 pips off from the low. And it was for, we were using the weekly pivot probabilities and range probabilities for this trade setup. Oh, I think I have to, yeah, we're all good there. Hide the drawings. Check that out. Right there at the edge of the S1.5 pivot. And then if you go ahead and you pull up range probability lows, see, there's your second bump in your distribution. You got a bump right here. I mean, I could hide this to make it even clearer. You got a bump right here for where most of your lows usually occur, and then another bump right here for where your lows occur during particularly bearish weeks. I wonder, how does the new data line up? Well, the new data, I think we have to do this. Boop. And then let it reload. This new version of the indicator, I've been able to successfully increase the number of simulations it'll run. Oh, look at that. That actually looks pretty darn good. Oh, that actually looks pretty darn good. Oh, wow. And look at that. I don't know. Again, I have to double check if like that's a real thing or not, Because this hasn't failed at all. The way these numbers have been generated hasn't failed at all. And this keeps me up at night. Like, if this is saying, hey, like 10% of the time you go and you have these huge moves, like that's 1.4, 1.5% in a week to the downside, like that is crazy. But this has, I was saying something about the simulations. So currently range probabilities lets you simulate about 3,000 to 4,000 times, depending on how much data there is loaded. Whereas this new version is using like 10,000 simulations. So it takes a little longer to load. But, if you can get 4 or 5 or 6 times as many simulations, I think that leads to more robust statistics. So let's go with that upgrade if we can. Now, the question is, where do we go from here on this USD CAD setup, right? Because we got the entry down here. I'm kind of, at least for this week, I'm going to go ahead and just stick with, we'll probably go to like this R1. Right? And that's the probability weighted pivot. which is roughly at 10328. And then using range probabilities, you see, oh, it's a, yeah, you could probably go past that. So this is probably your baseline threshold. So somewhere between R1 and R2 looks like a reasonable top for this specific week. Also, one very, very critical thing is the yield spreads. Oh, the yield spreads. I mean, that's one of the reasons why we stayed long this. I mean, there's such a positive yield spread day right there, and then buying on the positive yields, like, yeah. And so the yield spreads aren't as positive as they were yesterday, very clearly. Or at least the rate of change hasn't been so positive. But you can see the short term, that is over the last 2 to 7 trading days, the yield differentials across all durations from 1 to 30 years have been improving over the last week. And the longer term durations, their differentials are also improving. Net, taking all that information into account, the differentials are net positive across all durations in favor of the US dollar against the Canadian. And considering that, talking about, where is it? Let's go here. I'm going to the outlooks real quick, and I'm seeing if I can find a particular outlook on the Bank of Japan, not Bank of Japan, on the Bank of Canada. Let's see. Oh, there it is. I got like 20 tabs open because I was posting all the outlooks today. This is from RBC. So let's go to Nope, that's the live stream. There we go. So this is from RBC, Economic Update, Canadian GDP growth picked up. This bottom line here is what I wanted to read to you guys. Right here. It continues, like it looks very short, but then it continues down here. So just like the RBA, the Reserve Bank of Australia, institutions out of Canada have same concerns about the Canadian economy. Momentum in service spending also appears to be waning. Gross sales at food services and drinking places have been trending at low levels since below January. The Bank of Canada won't hesitate to hike rates further if necessary, but we maintain the view that the worst is yet to come for households, with pressure from near-term record highs and debt service expenses. So this is saying, hey, the Bank of Canada might not hike strictly due to the monetary policy effect accelerating onto households. Because I don't know, I don't think there's a huge deal of fixed rate mortgages actually in Canada, at least not to the size of the United States. We expect that will soften spending, so all these extra debt expenses due to the higher Bank of Canada cash rate is going to soften spending, push inflation lower, and keep the Bank of Canada on the sideline over the second half of this year. So RBC is of the opinion that the Bank of Canada has achieved their goal in trying to push Canada into recession. Oh, good morning, James. Morning, Ran Masu. Guys, let me know if you're here. Leave a like, subscribe if you're new, all that good stuff. Share the stream if you got a trading buddy. Share with your trading buddy so you can listen into what you're listening to. Okie doke. So, any requests? We got any chart requests? Otherwise, I'm just going to be going over like basic stuff. I mean, I've already covered pivot probabilities, kind of talked about some of the things. How about we go over for the month? USD CAD. Expectations are probably going to this R1. I think we end up going to close to 134 for the month. I think this set of probabilities that dip around this R1. And with the new version of the indicator, you can even see like, okay, there's all this tail risk above R1. So most of the time you top out here or you top out around here. And then this is like your 97th percentile tail risk up here. So that's effectively guessing where your top comes in. And then using this version of the indicator, it's like, okay, you're going to R1.5. Again, I'm going to be double and triple checking the new indicator before I release it. But it's just interesting to see how there's a bit of a difference. So I wonder what's causing that. Got to do some science stuff. Got to check up the discrepancies. One of the things that we can do actually is look at the seasonal forecasts. So let's see here. We got bullish trading expectations up until the 6th trading day of August, which is Tuesday the 8th calendar day. So if we do see any bearish seasonality come in, it's going to be from the 6th trading day of the month down to maybe you start getting some chop around the 10th. Yeah, I'd say that your bearishness kind of teeters out around the 10th or 11th trading day, and then you go back to positive seasonal expected value. So from here to the 6th trading day, I would not be surprised to see continued upside movement. And so long the yield spreads also stay positive and continue to gain momentum for whatever reason, maybe the Canadian economy slows down more, we can go ahead and we can check out the economic calendar ahead of us and see if there's anything Canada related. We should probably check out Great British Pound immediately after this, so then we can get some update on, let's see here, manufacturing. All right. 2-year Treasury gilt option actually came out. Down. Yep. Just looking at these numbers, I'm like, down. Yeah, look at that yield spread. Negative from all the way up here. Would have kept you short this whole time. And we still were able to trade that. Well, how about this? Let's do a trade plan for the week here. Yep, we're probably not going that high. So what's our downside risk here? Probably this area. Yeah, probably this area. Call it 127.2. Yeah, so our probability weighted pivot's roughly here, 127.2, or rather 127.3. And then this area here is what I'd be most concerned about. Let's go ahead real quick. Let's try out the new one. Yeah, quite a lot of spread around this area here based off the new stuff. It'll be nice to get that smoothed out. Actually, if I do this real quick, maybe that'll make it a little more legible. Or it'll just break it. This is experimental. Oh no, it actually does what I think it's supposed to do. Yeah, so a low right there, low down there. I don't know, we'll see. We'll see how it turns out. But we always got our good friend pivot probabilities. So I'd anticipate most of the time you get your low above this S1.5. Crossing below there is the bearish threshold. And I'll set up an alert on that. And then another alert at the S1. Kind of following in line with the current version of range probabilities. So the expectation is down. Timestamp that. And now we're in August. Today's the first trading day of August and the first calendar day. And then take this to a likely close. So where are we likely to end the month? So back up here. And it looks like range and pivot probabilities agree. It will probably end above the S1 pivot. So the trade plan should be more like that. So hopefully sometime by these economic releases. So there's the BoE interest rate. And they are expected to hike. Bank of England is expected to hike. So maybe on the day before, we get down maybe over the next couple of days to below the S1 price. And then in the 24 hours leading into the Bank of England rate decision, you see yield spreads start to get more positive. Effectively, these red bars start to get more neutral and white. And then after the BoE announcement, if there's a hike, whether that's 25, and there's some analysts calling for 50 basis points. If they do 25 or 50, it should help improve the yield spread differentials, make it go more positive. So let's go ahead and put that in here. So if we get positive yield spread differentials, or rather just call them yield differentials. If we get positive yield differentials in the time leading up into the Bank of England at these likely lows here below S1, it'd be a particularly good high probability setup. And then once Bank of England actually comes out, if they actually do hike, the trade will make money. If they don't hike, then the stop at S1.5 is actually quite reasonable. So let's visualize it. Something along these lines. And potentially go all the way up to central. So somewhere around this area. And it's only an end-of-week trade. Because next week, 66% of the time you close below the weekly pivot. So next week is a bearish week. And this particular week's also on the more bearish side. Yeah, so I'd stick on the bearish bias for this week and next week, but there's possibly a rebound going into Bank of England. Sometime or, call it Thursday, Friday. Holding any shorts from here or any shorts from here or any shorts from earlier in this week, like for right here, the target for those trades on the intermediate level is right around here. But now that we're in August, let's actually look at the levels for August. Yeah, you could probably head to 126 for the month. That could be quite far. Yeah. You can very clearly see with range probabilities. Okay, most of the time, you're getting your low for the month around that S1 pivot. And the yield spreads on the daily side are insanely bearish. So this is just, if you got a net short bias position on pound dollar already, this, based off these indicators, the interpretation is that it looks good to go till 126. Right? Maybe in the sub area, somewhere in the 125 handle as well. There's some opportunity there. And you real risk like falling knife scenarios below 125. Yeah, you can see that's where your odds start to get really skewed lower. Okie doke. Let's see here. Any requests? Nope. Good morning. Everything so far so good. How's the stream holding up? I'm seeing sometimes the stream seems like it's going out or coming in. Let's see. Yeah, I'm getting a lot of movement on my data for some reason these last couple of days. I don't know why. Yeah, it's like going to like 1200 kilobytes per second to 2000 kilobytes per second back to 12,000. It's like doing this up and down thing. Oh wow, and there's all my chats out of nowhere. All my chats just I just got like 20 chat messages just now. Okay, okay, okay. It's good now. All right, good, good, good. All right, so James, Euro Swissy, Ahmed, thanks to see you in here. Euro Yen, James, pound dollar. Well, thank God I just went over pound dollar. Vilios, nice to see you. Rammasu, gold. All right, so we got Euro Swissy, Euro Yen, and gold. Let's look at it for the week. Oh, yeah, Euro Yen seems to be pulling up higher to the entry that I had from earlier in this week. I did catch a short because we're at a very likely top for the week based off range probabilities. Also, you can very clearly see the yield spreads are very, very, very negative. So I'm not all too concerned about this trade going higher, because if it does go higher, then it's gonna like go, yeah, hit the high probability spot there. Let's try reloading. What's going on? I'm not getting any notifications that my like internet's out. Nope, it just TradingView just refreshed my whole layout. Thank you, TradingView. Okay. So let's see here. This says, yeah, the new data says maybe it goes a tad higher and the real risk is going past the R1 pivot. So that's what it says there. How about on the day using the current version of the indicator? Yeah, the top could be in for the day. I'd be surprised if the low was in here, in all seriousness. Yeah, you could go a bit higher. Maybe you go just past the prior day's high, but you know, unless you see a nice improvement in price where it goes very low volatility, something like that, and then goes up sometime around Thursday, Friday. This is just a stop out on the shorts here. Euro Swissy. All right, we had expectations for this scene to go up that day and up on this day, and it looks like we are going up, up, and away right now. Well, we hit the likely low for the day. We're at the likely high for the day. It seems like the range for this day has moved. I don't have any more expectations for the day ahead. Let's look at our pivot probability high odds for the day. Ooh, yeah. Pretty good odds of going higher for this week on Euro Swissy. This week, the bullish range bias works quite often. Yeah. Range probabilities, though, isn't really showing much. The new data is saying R1. This whole area just in the middle of the 96 handle, right? So I'd say R1 is not unreasonable. And the yield spreads are quite positive on a 12-hour. And are they super positive? Yeah, they're pretty positive on a daily time frame. And God, it's like 87% of the time the top for the month isn't in yet. It comes in like somewhere around 80, around above the 87 handle. So if I had a bias on this, it truthfully would depend on euro expectations against the Swiss franc. I might want to be long this pair. Just looking at these yield spreads, I might want to be long it because it's only these short-term yield spreads that are having most of the negative effect. And it's mostly this 3 and maybe the 5-year that are moving it. And most of those movements are lagged. And then when you look at the longer term yields, those are distinctly positive. So the longer term yield differentials are supporting this right now. Until the short term ones come around, sure, you can have a bullish bias on this. It's just, it's going to be on the more dicey side as to getting the timing for this trade correct on a long trade for the month or even on a short trade for the month. There we go. Yeah, gold. I use the gold futures contract for my charting. It's got good historical data on it. And we likely topped out for... Did we actually like... Yeah, we topped out most likely for the week. We probably topped out. Yeah, we probably topped out. All right, so what's our downside expectation? Oh yeah, I gotta turn that off for some reason. Yeah, let's pull up our pivot probability. Low odds. Range probability says once you go past central pivot, you're going to be dealing with pretty big skews, pretty big volatility. Oh yeah, I'd be careful. This is all effectively a guess where you bottom out if you go below the weekly central pivot. So I'd be careful. Once you're below 1980, it's like a guessing game as to where you actually are going to end up. Yeah, look at the spread here. Just all these odds are the same height up until you get to this S1. Yeah, I'd say once you get to this area here in the middle of the S1.5 weekly to S1 weekly, in the middle of this area right here around 1950. If you actually do come down here, this is a good buy. But this is expanded pivots, which means the volatility from this prior trading session has expanded the range between every pivot point. So while most of the time the pivot ranges are more conservative, like maybe $5 on gold on the weekly pivot here, but right now, because we have expanded pivots, the ranges are like 10, 20 pips, right? You can see 10, 20. These are wide ranges for pivot point strategies. Yeah, I'd be on the more careful side here, for sure. How does our seasonal expectations line up for the month ahead? Load up seasonal forecasts. We got a notification on dollar. We'll look at that right after this. And it looks like it's pretty flat. The expected value does start to rise after the 7th trading day. So from here onward, you get positive seasonal expected value. So I'll be pretty neutral based off seasonal information from here, but right now it's a guess as to if this thing is gonna plummet or not. Let's go over and check out the DXY. Hey, up and away. So this orange line comes from the trading assessment survey that I do once a week in the Discord. And I send that announcement out at the end of every week. And I ask you guys if you think next week will be closing above where we closed the prior week. And overwhelmingly, you guys were bullish on the US dollar. Like, overwhelmingly, you guys were. In fact, I can go back to Discord real quick. Let's see here. So here's the thread under the general chat. So here's the survey results from last week. And this is the first one here, dollar. So these numbers show you the probability. What's your probability that we end above last week's close? You guys were 60, 70, 80% thinking, yeah, we're going to have a bullish week on the dollar next week. And so far, you guys have been right. And this is for oil, Bitcoin, bonds, and SPX. And by the way, thank you guys for responding to these surveys and sharing these surveys, because the more responses that I can get, especially from guys who have knowledgeable experience, like, again, if you're learning, it's all good. But the more guys who are traders who can give their thoughts, even if you're learning, it's good to give your thoughts so that then you can see these results and where you stand compared to everyone else's trading expectations. Again, what was the thing I said earlier? You have to know trading expectations in order to figure out how new information can change those expectations. Well, this is one way of figuring out what those expectations are. And this is all anonymous. So if you trade and you want to figure out what the expectations are of other traders, you can answer this. It's only 5 questions, 1 question per asset class on the major asset for each asset class: FX, commodities, crypto, bonds, and equities. Okay, so let's head on back to the dollar is going up and away. Those are some. There's still a lot of headroom, huh? Yeah, a lot of headroom still to go higher. How about seasonally? Yeah, bullish range bias lighting up green. Pretty good odds of going below the monthly central. I would not be surprised to see the 103 handle above the 103 handle sometime this month. But again, the odds are still so freaking strong that we go below that monthly central pivot sometime. Yeah, I'd be surprised if we do not trade below the monthly central pivot sometime this month. However, it's not out of the question at all. Next month, though, is pretty darn bearish. You can see those odds for September. Bearish range bias, 74% of the time you hit your target. Jeez. So this month can kind of go either way, right? It's pretty range bound based off the pivot point strategies. But again, you got expanded pivots. So because of the volatility from the prior month, you have a larger degree of uncertainty as to what exact price you should be entering or exiting at, because the range that you can trade based off any pivot point strategy is now much, much greater. And that's where something like range probabilities or going down to lower resolution pivot points can be useful. Oh, wow. Those are some bullish continuation odds. Yeah. Okay. Oh, wow. We're already at the probability weighted pivot high for the week. Check that out. I wonder if we're at the likely high based off range probabilities for the week. Wow. That new version of the indicator loaded real quick. Jeez. Yeah. Quite a lot of highs to be made around here. And then around R 1.5. So there's something to be said about going short here on the dollar and then putting a stop at R2 real quick. Yeah, this is where 90% of the time your top comes in. And then if you use the new setup, that comes... Oh, what happened to my tooltips? There we go. Yeah, and then that number comes around here. Yeah. And then look, there's your tail risk. So a stop at that R2 with both of these setups. Yeah, a stop at that R2 seems reasonable if you wanted to start going short from here and here, but you'd have to use such small size because you're talking about the thing potentially moving 0.5% and you having to sell on the way up. It's really not the best setup that I could think of. No, not really. Not really. Not really. All right. That one is looking good. That one is looking horrid. Let's see here. Bro, I'm a beginner in trading. What do you recommend for me? Well, I recommend you read this. Here, I'll switch to the full cam here real quick. If you're literally brand spanking new as a baby bottom to trading, read this. It's a relatively new book on trading. You can get a lot of books that are quite old. But if you're new, get Alpha Trader by Brent Donnelly and read his articles. He will help you learn a lot of the basic concepts around trading. And this is actually a signed copy. Ain't that cool? And then some of the other books I got here on my desk. Quant. And then this thing here. The failure of risk management. Oh God, you know, there's some horror stories in that book of some of the malpractice that goes on. Oh my God. So yeah, start off with gaining competence. And hop into my Discord, read outlooks, and talk with the other traders. Alpha Trade is the trading in the zone of our time. Yeah, it sure can be for quite a lot. Yeah, it probably is, now that I think about it. Yeah, because trading in the zone now is quite old. Where can I find article? I post the articles in the Plan to Profit Discord all the time. Can you make a list of books in the Discord? I mean, I can, But it's a lot easier for me to say, like, oh, I'm brand new to trading. What should I do? I just throw this at you. And if you're like, oh, I'm already a pretty good intermediate at trading. I already have a lot of concepts under my belt, but I'm really still not that profitable. There's another book that I don't have a physical copy of here, but I want to get a physical copy of, called In Pursuit of the Perfect Portfolio. That's the next thing that I say, truthfully, you should be reading In Pursuit of the Perfect Portfolio first before you read this. But if you got the trading bug in you read this. And then if you want to be responsible and actually make money, you read In Pursuit of the Perfect Portfolio. Then after that, you're going to be reading this for fun. And if you start getting into like professional system stuff, you're reading stuff like that and stochastic calculus, and you're going back to school for your math. You're going back to school for math, oh boy. Okay, doke. I don't know about you guys, but these yield spreads are horrid. Let's go ahead and look at our lows. Yeah, the high is probably in... Where is the low? How low can you go? Oh boy, it's almost like I said that we were gonna gap down. Oh no. In the trading group, I do a weekly video and I said, this thing's just gonna come down to the 109 handle. Let's look at our low range probabilities. Hey, check that out. Here's our second bump in our range probabilities, right at our probability weighted pivot low. And then using this is also saying roughly around here is where you find a lot of your lows, and then roughly around here. So I wonder what makes the difference. But I'm still going to trust the way it's coded right now, because that's experimental stuff going on. Okay, doke. Pachoke. Now's a good time for any last calls on requests. If you got any requests. In the meantime, I'm going to pull up one more chart. New Zealand dollar. Down. It didn't quite hit my target. But boy, oh boy. It's getting into a good spot here. I want to be bearish on New Zealand absolutely by the time next week rolls around. Oh, USD CAD going past R0.5. Hey, new highs. Did I get stopped out on my Aussie dollar long hedge for this USD CAD long trade? I am probably gonna have to double check that here. Oh yeah, that definitely. Oh yeah. So real quick, load. Do. I said, how low can you go? Alrighty, cool. It got me out. Let's see. 135 pips profit. Jesus. That sounds... I was actually talking about this exact scenario with somebody, saying, hey, going long here actually is quite reasonable because you can probably gap down much, much lower. Wow, that thing loads fast. I mean, that's not correct, but still loads fast. Yeah, see, this is just saying, hey, 90% of the time you bottom out here, and then this is all your tail risk. The new calculations are like. You got some lows around here you can go to. Yeah. So it'll probably go to the 66 handle now. Probably a little bit below that. It'll probably stop around the 66 handle if I were to guess. Oh, and then there was on the flip side USD CAD also. Bum, ba, bum. Switch that to the day. Hide these drawings so they're not in the way. And then up here, around 1331, if I recall correctly, there was another bump in the probabilities. Yep, right here. See where the colors start to increase? You got this 3 and that 4% right around here. So I'd be expecting that now. From here to here. Probably it's going to be another 25-ish or some odd pips of movement on the day. And then the question is, does it actually close up there? Or do you get some kind of 10, 15, 25 pip reversal off that high? I don't know. Based off my expectations for at least the United States and Canada, I'd expect things to continue going higher. For the United States and Australia, probably in the same camp. Probably in the same camp. I'd like to just keep my bias going, and my bias is already expressed in trades, which is long US dollar and actually long the yen, with euro yen short still on. I might go ahead and take another swing at a short at this spot with a very small position, but yeah, probably not the worst idea in the world, but just got to be careful. You don't want to, just because something is low volatility and going sideways, that's not a reason to keep sizing up. Like the space that you have between entries, the amount of time that you have between entries. If price isn't moving, you need time behind your entries. If price is moving a lot, you don't need a whole lot of time between your entries. There's kind of like this function where if volatility and the variance is going crazy in price, you want to size in to your maximum allocation for a particular asset as quickly as possible. And when things are, just kind of steaming along, you don't want to just jump in, right? At least when it comes down to spot positioning. Maybe around here you're doing some interesting options trades, some neutral options trades. Why euro yen short? Well, because of the JGBs. What's going on with the JGBs? Actually go to the Discord chat, and under research there's the outlooks channel. Here, I'll go to it real quick. There's all this research that just got posted today from MUFG. BOJ effectively raises cap on 10-year yield JGB to 1%. And so this is all the technical information you need to become an expert on what's going on with the Bank of Japan, because these are particularly good breakdowns of the Bank of Japan, because MUFG, the M stands for Mitsubishi. This is MUFG is a Japanese institution. So I'm getting commentary from them, and things are pretty good for Japan, to say the least. The least. Also, the daily yield spreads, I think, are still super negative, yeah. And then there's this 91% probability of making a new low on the month. So, and let's actually real quick look at our upside for this month. I mean, the bearish range bias is the only one that's flashing green. Yeah, this is definitely a spot to be careful. Careful. Because you get a jump here. You get one more jump here of a half a basis point or 100 basis points. Because this thing is probably going to go to 1%. And the yield spread is going to get ever so... The yield differentials between Japan and all the other countries are going to get much... We're going to move much more in favor of Japan. A good visualize it. I showed in yesterday's stream, actually. Let me see if I can find the... Yeah, here it is. Back in the Discord, in the general chat, I posted this. It's a video, it's a slide from Weston Nakamura's last video, and it shows you how those 10-year JGB yields have been moving as the Bank of Japan has been moving their policy. And you can see every single time they widen the band, the JGB yield just goes to the cap. And this is the primary reason why the yen has been gaining strength. Frankly, huge reason why the yen's been gaining strength. Okie doke. I think I've pretty much covered everything that I wanted to cover. Go ahead and real quick double check. Aussie dollar, I already did that, James. Gotcha. Alrighty, you guys. I absolutely appreciate every single one of you guys for watching me today and every day. These streams start at 4:30 Pacific, 7:30 Eastern, every day, Monday through Friday. Where for all these FX currencies, and then I can do commodities and crypto and bonds, and then we go over some outlooks research. A lot of cool stuff do for people who are a part of the trading group. Alrighty, you guys, thanks for watching, and I'll see you tomorrow. And if you want to hang out, I'll be here in the voice chat over on Discord. Photo.